Hello, 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 everybody. Happy New Year's week. How's everyone doing? Good morning, Jacob. Good morning, Patrick. Good morning, Sterling. Good morning, John. Good morning, Jake. Sterling with interesting information about value and growth stocks. Uh, it will revert. It will revert. Things go in cycles, and pretty much a lot of people on Wall Street only know chase growth. And with free, cheap, or very cheap money over the past number of years, where you could borrow and grow and buy and leverage stuff, growth has outperformed value. Value will reign again. But you know what's interesting? Even value stocks a lot of them aren't good valued. The whole market needs a shakeout. Good morning, Heinrich. Good morning, Royal Palms. What is Japan? Is Japan the cause of the pre-market drop? What is there something specific you're relating to with Japan? Good morning, Dan. How are you doing? Thank you for tuning in. Hello, Charles. Oops. Hello, Charles. There we go. All right. So we started the sell-off on Friday. We had that little mini double top within the bigger potential double top. The double top did trigger on Friday, and it kept falling. Then it's just falling through today. Things could be shifting. Things could be shifting. Remember, with yields climbing, the 10-year, even with this little flight into things like notes and uh, shorter term rates right now because of the markets dropping, your rates are still holding on the 10-year at 4.56. I did not hear that right now. I did not hear that this morning. Maybe I missed it, but I don't think that's causing the big issue. I think this is more Santa Claus took his sack of gifts home. Now the things got are way overextended and yields just keep climbing. They were shrugged off by a long time. And we're starting to see things deteriorate. Everything's not hunky dory out there. And inflation's not going away. And I think, at some point things are getting repositioned at the end of the year, and we'll see. We might get a little bounce in next year, but I'm going to be watching more and more, especially if these doubles top, if they trigger for rollover plays. Rollover plays. This has gone very far, very fast, and again, everybody's still in the bullish boat. Everybody's still in the bullish boat. You have the retail like counting on another 20% gain next year. And when everybody runs to one side, watch out. So, remember, it's New Year's week. It's going to be another slower, quieter week. Markets are closed on Wednesday. I will be here, though tomorrow I will not be here Wednesday. I will be here tomorrow. Today we have the Chicago PMI coming out, pending home sales, Dallas Fed Manufacturing Index, but very quiet news week. Remember, just your EIA numbers are shifted from Wednesday to Thursday. You still have jobless claims on Thursday. Probably most important thing is ISM manufacturing on PMI on Friday. That's really about it. Just in terms of earnings, there's like Thursday, you got RGP and Lifecore. So there's nothing. Nor should there be. In terms of this, we got red. We got finally Broadcom pulling back. Remember, it has a potential double top too. But mega caps are pulling out, and remember how concentrated this market, especially due to the passive flows over the last year, which the passive flow money just coming in and then buying up, and these. Let's just go beyond the Mag 7, but the top 10 stocks are like, what is it, over 40% of the market cap of the S&P, which is absolutely ridiculous. Essentially, you're trading half the S&P is nearly trading with the top 10 stocks. So when things shift, and watch for this change. Michael Green, who does a lot of work with passive flow, we should still have a positive net passive flow, but it's starting to unwind, he thinks, more so in 2025. And without that passive flow, it could be a major market dynamic. And if the passive flow, especially with boomers, shifts to withdrawals, okay, and start liquidating, remember, this can happen in reverse. So keep that in mind. I was going to talk about that more next year, but keep that in mind for the next little bit. And here's the other thing. Let's see, where did I leave off? People talking about tax loss harvesting and how many losers out there with market stuff. Yeah, that's exact. And people are just trying to say, oh, well, this is, I'm going to tell you something. There's not, it can just be selling. It can be selling in a very strong market, locking in profits. You don't need to know. Again, it's an intellectual thing. Wait for the patterns to trigger. Like we had a little one trigger on Friday completed. Wait for the bigger patterns to trigger. Wait for the patterns. Everybody's going to say it's because it's this. You don't know. Can you check on Bitcoin? We'll take a look at Bitcoin. We'll take a look at Bitcoin for you at Dark Screen. Thank you for tuning in. All right, so it's pretty red across the board. Not much green. Santa just leaving a trail of red. Groups. The only thing that was performing earlier was energy up a little. Energy still looks like it wants to break out higher. But everything else is negative. Technology, comm services. This is definitely, in the terms of what they'll say on like CNBC, this is a risk-off day. Fed watch still favors the pause in January. Fear and greed still solidly in fear mode. And Schiller PE still a super expensive market. This has not done anything to correct. Remember, this can market once it gets into correction mode. And I don't know if this is it yet. Now, whether you trade this as, it could be traded also as a head and shoulders here, because unwinding this move, if we wanted to look at this as a head and shoulders instead of a double, the key area for a close below the neckline is going to be right about 59.30. And that's just going to put in a different set of targets. I'm just going to use the double targets over here for the time being. But you had a little end of day buying on Friday, but that's turned back into selling. I flipped around the harmonics. Remember, I did hit the 75% harmonic. This key on a closing basis today is about 59, 56, 50. A close below that, we have the probabilities then to retest the lows from Friday, December 20th, the quad witching day, and then potentially trigger the double. And before that, that could also have already triggered the head and shoulders. Shoulder, head, shoulder. So that's where that sits in the shorter term. Keep an eye. Sideways move, rotation zone on the 4-hour coming down. On any bounce, I'm paying very close attention to 59.85 area. 59.85, 59.86 area is very key resistance. And going into the open, if we do bounce at all, I'll be watching first the 15-minute rotation zone. And my key level based off of that is about 59.67. And then if we get through that, I'm going to be watching the 1-hour 8 EMA. It's about 59.86. So that's the very key levels I'll be looking at. Other than that, on the sell-off, if it continues to push down, we're looking at about 59.32 to 59.26 as my first very key level support. And if that breaks, 58.96. If the whole thing, then the key thing on a closing basis, by the way, the low close was from December 19th. The low close, 59.34. So I'm paying attention to that also. If we do close below that 59.56, 59.56.50, really pay attention over the next day or so if we close below the close from December 19th, because that would be the low close in this pullback. There'll still be we still have the dip buyers, but again, you got the dip buyers on Friday afternoon. Remember, you got the dip buyers on Friday afternoon here, and then it just rolled over again. So it's so ingrained that the dip buyers are still here, and we still might get them. So that would not surprise me. But this is a very key area to watch for. Just remember, Thursday the 19th close. The NASDAQ. The key on the closing basis is 21,420.75. That's the 62.5, because if it closes below there, then we could easily retest the low area from Friday, December 20th. And on a closing basis from the 19th, which is also key, as I discussed, same thing from the NASDAQ, pay attention to 21,379, which would also just above it, it's just right there. It could also then close below the 50 EMA. The last time this closed below the 50 EMA was back at the end of October, and that was just barely. The last time it really started to make a difference was back in August. So I'm paying very close attention to this area too. Same thing with the NASDAQ. On any bounce in the open, I'm paying attention to the 15-minute rotation zone. And the first key area will be 21,460. And then if it does get through there, the next area I'll be paying attention to the 1 hour rotation zone and right about, specifically about 21,550 on any bounces. Are you ever not bullish, Coco? Just wondering. Dow. Key area I'm watching is the close from December 18th. 42,778. By the way, on these longer term stuff, let's just go back to the S&P. We are, remember, in bearish mode still. We didn't get the 87.5, but we tapped out that 75 to put in potential double top territory. And we've rolled over. And on the weekly, this is also, I didn't cover this, and this is key to watch for. Look, watch the bottom of the rotation zone on the weekly, because if we close below that, that takes it to neutral mode on the weekly and bearish mode on the daily. So the market, that does not mean, again, the market's still in bullish mode on the weekly, with weekly cycles getting closer to the bottom, which then, especially if we set up with a red week this week, potentially, it could set up for, if we do bounce, if you go back into Coco mode, this week's high could be very significant, because that could be a percent beat buy. I'm paying attention to that bottom of that rotation zone very, very strongly. Sorry to get detoured there. Just forgot to mention a couple things. The Russell, pay very close attention. First off, on a closing basis, the closing low on the last pullback was from the Tuesday the 19th. So pay attention to that close, 22.45. But then, very key, if we start closing below the 200. The last time this closed below the 200 was back before it recaptured the 200. Since it recaptured, let's just go with that. Since it recaptured, this was a close right at it. The last time it closed below it was on the sell-off back from September 23. Since it recaptured it in last December, we have not closed below the 200. So pay close attention to that. Oh, that's pretty funny, Eric. That's pretty funny. The VIX slightly elevated with the market pullback, but not a lot of fear just yet. DAX might be getting across of the rotation zone, and watch to see if this loses the 50. But what is key for me is this level I have about 19,980 on a closing basis. Notes, little flight into some safety, but still sideways correction with cycles getting back to the top, which is very interesting, and now up against the rotation zone. And you see here in the yields a little pullback, still sideways correction, still holding well above the 25% pullback harmonic with the rising rotation zone. This is just due to the market sell-off and a flight, and yields aren't really like dropping, they're just pausing for a bit with a flight into some safety. By the way, based off the Fred data, the 10-2s, look at that. Remember to double? That triggered based off the Fred data. This is based off the Fred. Hit the full target. Hit the full target on that double. Took a long time to play out, but right there. And on the 10 3-month, we just hit the second target. I know it got overextended here, but just it's interesting. Dollar index. So far, this is probably going to get invalidated today with the double. I'm just pulling it off. We still have the rotation zone. Again, we also still have a very key area above. So paying attention to how this reacts right here. We already have dipped into a very significant levels right here. It's 107.40. If we close below that, I'll start watching for the bigger pause / pullback. If we hold this level, though, I'm still watching for a run up to 62.5. Rotation and energy. And look at this. And crude looking to break out today. Going to be paying attention to on the closing basis 71.95. Natty gas with the cold snap, and we rolled, and also look at this wasn't just due to the roll because this is back adjusted. Okay, look at what this, there you go. So natty gas also taken off with the critical low temperatures going into the Midwest and the East Coast. Gold still has not invalidated this little mini 4-hour double. I'll put up the invalidation point again. It's not made a lot of progress, but it's a 26.13 on a closing basis, or a trade below 26.07, and it has not reached the first target stop raise area. So we'll see if that one works out or not. The yield on the 10-year pulling back a bit for the JGBs, but still broke out on Friday, little pullback today, and the yen still holding in there. We still do have a potential double against the rotation zone, but we also have the magnet price, which the probability is that say 159.15, and the double's not triggered. So I'm still watching for this to continue to weaken. Good morning, Anissa. Thank you for turning in. All right, we wanted the Bitcoin. Based off of this head and shoulder, all right, the double which confirmed but did not trigger was invalidated on Friday. So that is off the table. Now, as Dark Screen asked about, you do have a shoulder, a head, and a shoulder. Where does that roughly put the targets? Well, since this horizontal neckline, I could just roughly do a projection from there. That could potentially take it back to 76,000 and even to the 200. So keep an eye on this. We have a little pausing area right up this 87,400. But if that loses, we could see you're into a clear path move then. This is not triggered, by the way, yet. So it still needs a close below 91, just call it 91,900. Is that right? Yeah, about 91,900. So that's the key thing for Bitcoin, because that went really far, really fast, took out that 100K level, went a little beyond it, and then rolled over. Tesla, not in double top territory, but the key level I'm watching on Tesla is 412. NVIDIA, we still did not invalidate this sloppy head and shoulders yet. So still watching that. But Avgo, Broadcom, we do have that really nicely formed double top after ticking off the 87.5 last Thursday, with cycles getting to the top. So pay attention to Avgo. Now the trigger point is still a long way away, so this might never trigger, but pay attention to 217.58 on a closing basis. Still technically with the daily rotation zone in the way, so lower probability, but that could signal more a continuing market pullback. Again, might never happen, but this thing's gone to the moon. Yeah, I got it. This thing's gone to the moon and still trading super, super expensive. Even though it's one of those wonderful growth stocks. What else? What else? Let's peek back at the S&P. Again, so far some pretty steady selling pressure. Pretty steady selling pressure into the open. What's our volume look like? So, I mean, Friday was definitely picking up today, so I want to watch how today's volume also reacts to Friday's. To see how it reacts to Friday, but also remember this is a holiday week, so we're naturally going to have lower volume. So that's really about it. I'm not seeing any other comments or any other things in there. Apple, I haven't updated this chart, but Apple, pay attention. The key on Apple is about pay attention to Apple about 248 on a closing basis over the next few days. It's trading 251 right now. Pay attention to 248 on Apple. Google, pay attention to 186 on a closing basis. Why are we going through this? Because if some of these start breaking down, Meta, pay attention to about 585 on a closing basis. See, a lot of these are getting very toppy. Hey, MJ, thanks for tuning in. So what else do we have? Apple. Why am I looking at some of these things? Remember, we had the double top in Microsoft. Hard to trade unless you trade it intraday, but that played out. We do have a little double bottom, but it looks like that's going to get validated. Also pay attention to if Microsoft starts losing this 200 area again, 425. Sectors are pretty weak. XLB. XLB, yeah. Materials, very weak, also below key support. So any bounce in this, again, would be looking for rollover plays. XLV, never triggered that double. Again, would be looking for rollover plays, especially with the close below 62.5. And we have magnet prices lower end against the daily and weekly rotation zones. So all these, what do I think about silver? Silver. I'm watching for silver right now to see if it gets into this double bottom territory. It's broken below very key support and bounced right back to that key support level that becomes resistance and now rolling over. So I'm going to be watching for this to form a double, and the only thing that then would make me bullish, and this would make me bullish on two different standpoints. It would make me bullish because the double would have triggered, and this is a very key level from last Thursday, because that retested the prior major support becoming resistance. So whether you trade it as a double or if it even doesn't form a double and it closes above last Thursday's high, that's the only thing that makes me short-term bullish on silver. Okay, on the bigger pullback area, if we look here on this last little spike up to the highs, if I can get this lining up, we're also back below, let me take this off. We are also with the bounce close here on Thursday below the 62.5. We rallied back to the 62.5 with the declining rotation zone and rolled over. So technically the magnet price is this 28.37. So we have probabilities we should still go lower. We've retested resistance now and confirmed it. and the trend is down. So that's why the only thing that would make me bullish on silver would be if we have a pattern trigger above Thursday's high. Other than that, I'd be watching for a very key retest of the low areas from August. All right, so that's my thoughts on silver. By the way, copper, and copper from longer term, we're still going to run into copper shortages. Shorter term, if things are pricing in more of a slowdown, copper also has a magnet price of $3.92, which could be testing last February's low area. So none of these I'm overly bullish on unless it forms a very strong bullish reversal pattern. I'm watching for silver and copper to both pull back. You're very welcome, Nisa. Thank you for tuning in. All right, going into the open, let's just take a look since it's right here. Let's see where the tick is. Ooh, minus 1,200, roughly. We're right here. So, going to be watching on the bounce to see what, if it's a weak bounce, we'll be watching for the rollover play once we get the bounce and the tick. Okay, that's really about it. And remember, keep an eye on that 15-minute rotation zone for any bounce, and then if that goes through into the 15-minute rotation zone, this 1 hour rotation zone is stronger. But right now, with that weak a tick, I would not be chasing the bull side without a pattern. Maybe you get a little mini double, but it'd have to be very nimble. It is in territory, but I would not front run anything like that. It would have to prove itself, and that would be a bounce play only because this is a lot of weakness in it. Again, we're down nearly 150. We are down 150 basis points in the NASDAQ. We were for a tick or two, and 130 in the S&P. So, not a lot of strength in this market. So be cautious unless it forms a stronger pattern on the buy side. With that, I will see everyone tomorrow for the last day of the year. Not just the last trading day of the year, but the last day of the year. Hope everyone has a wonderful day. I'll see you all tomorrow. Thank you for tuning in. Bye for now.